Hey guys, welcome back to another video of Stonks Maxxing. So this morning we saw ASML and VFC report their earnings. I think VF at one point today was up 8%, 7%, but is back down to around that 1-2% range. So they reported earnings. I think had a really great quarter, really great holiday season. The revenue print came out above consensus, so 2.8 billion compared to consensus expectations of about 2.75. My expectation was around the 2.77 range, so slightly higher, just about $20 million higher. Turns out the actual revenue print was about $250 million higher than consensus and the high range of guidance. I also didn't really take a look too detailed into the operating margin or the gross margins, but I think if you look at the year-over-year comparison, gross margins have increased by 200 basis points. And so I think that's really what Bracken Darrell and Paul Vogel and the rest of the team at VF is really trying to focus on. Remember, they have this whole reinvent plan, and it's kind of like this 4-pillared strategy. Each pillar represents a different focus. One of them is cost savings. I think they mentioned that's number one. And in the Investor Day presentation back in October, I believe actually that was November, they were able to outline a few key steps in order to increase their gross and OPEX, or I guess their operating margin. Gross margin, they introduced something called inventory trading, essentially using AI to be able to allocate inventory dynamically to different types of wholesale partners, depending on whether or not those wholesale partners are able to sell through their inventory quicker than the other, we'll call it second wholesale partner. So that's one of the big ones that I do remember. I think another one is timing in terms of actually allocating the right amount of people depending on when shoppers most go into a store, and then be able to reduce the headcount expense that way. So there's different ways that it seems like this company can play around with its operating cost structure. So selling general administrative expense, also cost of goods sold, and I don't know if research and development, if you would consider that. But let's take a look then at Q4. Yeah, so this is where I really need to focus on the actual cost structure of the business. So I think what we can do here is so my segment revenues is slightly higher than what they have. $216,459, 7, 6, 6, 2833912. Okay. So 29. Oh, right. So this is excluding Supreme, which I think makes sense. So So revenues, okay, and then let's take a look then at costs and operating expenses. So they really have only a few line items, right? Cost of goods sold, selling, general, and administrative expenses. Call it SG&A, impairment. So cost of goods sold, 1,238,738. So let's do like a gross profit. So 43% gross, SG&A 1,318,397.51K, so-called total operating expense. Income. Oh shoot, wait. Gross profit. Yeah, I just realized this is not the right calculation. Okay, there we go, 50% gross. Okay, so it did seem a bit fishy. It's that low. Seven, okay, so other income, so interest expense, nets, negative 36516. Okay, and then other income 7408. So EBIT. $1,966. Okay, income tax benefits come SG&A. 27,560. Okay. Income tax benefit, income loss from continuing operations. Net of tax. Yeah, I'm not entirely sure. I always get confused with this discontinued operations line item. I'm gonna ask ChatGPT what to do here. Let's see if I can just go. Okay, I do have to sign in. Don't know which account is mine. Oh, wait, maybe this? Do you know how I can interpret the discontinued line item? If the item is negative, does that mean part of the business sold off and part of it was profitable? Thanks. What's this supposed to? There were costs associated with the disposal. Oh, got it. Okay. Severance, impairments, or write-offs. Okay, so that income from discontinued operations may be from this, I think, is probably from writing off part of the Supreme, because I think they had to sell it below the carrying value of the company. Carrying value, I guess, is the goodwill plus all of the assets related to Supreme. But I don't think that, yeah. So income tax expense benefits. Come from continuing operations. Income from discontinued operations, net of tax. Okay, and then income from discontinued operations, net of tax. So this number is -1329. Excuse me, net income. Right, okay. And also let's do like operating cash flow. So 9 month end. Okay. 36292. Minus capex. It's not a whole lot of capex spend. Okay, and then so this is kind of like the P&L structure. I love using that word. It sounds so much more fancy than it actually is. The P&L structure, the P&L of the company. Okay, so I think what would be interesting to track here is maybe not everything, but inventories would be interesting to track. Let's see, so 1794, 517, okay. Other current assets, goodwill, operating, short-term borrowings, current portion of long-term debts, and long-term debt. Okay, and operating lease liabilities. Okay, so maybe let's do like a cash so we can calculate sort of this net leverage equivalence. So I think that's what Bracken and Paul were talking about. They're targeting 369, 376. Okay, inventories. Total current assets 5021480. Okay. Oh shit. Total assets 1055442222. Just 14. Okay. Total assets, current liabilities. Okay, so short-term borrowings, current portion of long-term debts. Okay. 807, 750, 504. Maybe they have a term loan or maybe some bonds that they have to pay back. Okay. Total accounts payable. So 14455, 786. Okay, and then just add this accrued liabilities. 1455. So that's what this is. 704. Okay, long-term debts, right? So long-term debt, I think, is definitely going to be long-term debts. And then let's do operating lease liabilities. 3884564 1103594. Okay, so long-term debt, operating lease liabilities. I think if we total liabilities, $8873992. think they just straight up 680230. Just use this as a plug maybe. Okay. Total stockholders SE plus L. Let's do this for now. Okay, nice. Okay, so total debt, call it. So long-term debt plus short-term borrowings plus current portion of long-term debt, right? Call it total debt plus operating leases. Guess you can consider a lease as debt too. So that puts this at 5. Call it net leverage. Okay, so what is equity? Yeah, I'm not entirely sure what they were targeting in terms of the multiple, because it's 2.5x, but maybe I'll take a look at what Workspace says when I come back. I do have to go soon. It's almost... Wow. So it's actually down today. Initially it was up, but then down. Maybe because of the Fed? Let's see. No. So VF is currently, man, they were up all the way to $28 today, but dropped back down. It's interesting. Short-term volatility in the market. I honestly have no idea what is going on. Okay, so net leverage. We'll do this. Yep. Okay, so that's good. Operating cash flow. I'll do this for now. So 9-month end, and then we'll just do like CapEx and free cash flow. Very simple, nothing too crazy. Makes my life easier. Okay, so CapEx, it's negative 64299. Free cash flow, we'll just take operating income. Okay. Got it. Other assets of discontinued operations. So yeah, this is a lot right here. Year over year, guess we could take a look here. Okay, cash and cash equivalents. Call 1-3-656-376. Let's take a look at the debt, because I think the debt portion is a little bit more interesting. Portion of long-term debt. 21. Accounts payable. 788,477. Discontinued operations. 79861. Okay. So long-term debt. 322 388. No, sorry. 470224. Operating lease liabilities. 1087,304. Okay, so they have, I guess rent has gotten more expensive in the past year or so, because I think net, I remember Bracken said they closed down 14% of the van stores. So net, when you include all of the expanding stores or new stores. Okay. Total liabilities 9954598. So I'll do it to equity. Oops. So able to lower the overall current liabilities, right? 3226911345979. Okay. Then long-term debts, operating lease liabilities, total liabilities. $1105,747. CapEx -11459. Okay. Stockholders' equity 1658365. Okay, so they've been able to reduce, yeah, this is very impressive, 4.3 to 3.4x. Quarter of the leverage has been reduced. Let me take a look. I do need to see when the bus comes. in 8 minutes. Okay, I'm gonna use the bathroom and then I gotta head out. So I'll end this here and then I'll pick the stream back up soon. Thanks for tuning in. Catch you guys in the next one. Peace. Peace.